Hello everyone, Dr. Alan Mandel. Here, welcome back to my channel, Science of Healing. There is one document you can pull up in roughly 5 minutes that for a significant number of people, over 65 leads directly to a larger Social Security check every single month for the rest of their life. Not a one-time payment, not a temporary adjustment, a permanent increase in the deposit that arrives in your account month after month. And the reason most people never collect that additional money is not that they failed to qualify. It is that no one ever told them this document existed or showed them the one specific thing to look for inside it once they open it. Senior tax programs and the financial rules that affect seniors every single year. And the pattern I see most consistently is honest, hardworking people receiving less than they earned every month because of a number sitting on a government record that nobody ever asked them to verify. Today, I'm going to show you exactly what this document is, where to find it, what to look for inside it, and the precise form that corrects it when you find something wrong. But here's what I also want you to know before we go any further. This topic has a scam attached to it that is specifically targeting seniors in 2026, and it is one of the most convincing ones I have seen. I am going to walk you through exactly how it works, and the one sentence that exposes it every single time, because the people running it know that seniors who just learned about a potential payment increase are exactly the right target for what they are selling. I will cover that in detail after we get through the correction process. Stay with me because knowing it could save you thousands. And there is one more thing I'm going to give you toward the end of this video, a free IRS tool that most seniors have never heard of that retrieves your income records going back decades and can be used as supporting evidence for your correction, even if you have no paperwork left from those years. No paperwork, no problem. That tool changes the picture entirely for people who assume their records were gone forever. Now, before we get into it, I want to say something directly. If you are the kind of person who acts on information rather than just collecting it, this channel was built for you. Every video I put out covers a specific rule, a specific form, or a specific deadline that directly affects your monthly income. Hit subscribe right now and turn on the notification bell. The next video I am releasing covers a Social Security rule that specifically affects people who claimed early and assumed their decision was permanent. It is not, and the window to act on it is shorter than most people realize. Subscribe so you are there when it posts. Now let me tell you exactly what this document is and why one wrong number inside it is quietly reducing your check right now. The document is your Social Security statement. It is free. It lives inside your My Social Security account at the official government website, ssa.gov. If you have never created an account, the process takes approximately 5 minutes. Once you are logged in, your statement is available immediately. Inside that statement is something most people have genuinely never examined in their entire lives. Your complete earnings history. Every single year you ever worked and contributed to Social Security, going all the way back to your very first job, every year with a dollar figure beside it. That earnings history is the foundation of your monthly check. Social Security calculates your benefit from your 35 highest earning years, adjusts each one for inflation, averages them together, and runs that average through a formula to produce your monthly payment. Your entire check is built from that average, which means one wrong number, 1 year that shows half of what you actually earned, 1 year that shows 0 when you were working, pulls your entire average down. And according to SSA data, a single year of missing or inaccurate earnings can reduce your monthly benefit by approximately $100. That is $1,200 a year. Over a 20-year retirement, that one wrong year quietly cost you $24,000. If 2 or 3 years are off, multiply that figure right out. And the SSA will never tell you. There is no alert. There is no letter. The error sits there silently reducing every check you receive until you personally open that statement and look. Let me tell you exactly who is most likely to have money sitting uncollected on their earnings record right now. 4 specific groups. And if you recognize yourself in any of them, checking your statement is not something to put on a to-do list for next month. It needs to happen this week. I'm going to explain why the timing matters specifically right now in 2026 after I walk through all 4 groups. The first group is anyone who worked for a small business during the 1970s, 1980s, or 1990s. During that era, payroll for small operations was frequently handled by hand. An owner working from a paper ledger, a basic bookkeeping system, sometimes just handwritten records. Honest mistakes in reporting wages to the SSA were far more common than they are today. And those mistakes rarely got caught because nobody was checking. If you spent years working for a small shop, a neighborhood company, a family-run operation, or any employer where payroll was not processed by a dedicated HR or accounting department, your record is exactly the type that tends to contain errors. Here's a specific example of what this looks like. A man I will call Daniel spent 4 years in the early 1990s working for a small landscaping company. Solid work, steady pay. When he finally pulled his Social Security statement years later at the suggestion of a family member, he found that those 4 years showed earnings at roughly 55% of what he had actually been paid. The owner had processed payroll manually and submitted incorrect figures every year. Daniel had no reason to suspect a thing. He submitted a correction with his old tax returns as supporting documentation, and his monthly benefit increased by over $280. Money that had been sitting miscalculated for nearly 30 years. The documentation you need for this group is your original W-2 forms from those years. If you still have them, those are your strongest evidence. If you do not, your federal tax returns for those years, showing the income you reported, are the next best option. And I will cover 2 specific ways to retrieve those records even if you believe they are long gone, including one free government tool most people have never heard of. That is coming shortly, so stay with me. The second group is anyone who has ever self-employed, ran their own business, worked as an independent contractor, or did any freelance work. Self-employment earnings are reported through Schedule SE, attached to your annual Form 1040. That reporting process has more points of failure than standard W-2 employment. A year where self-employment income was not properly submitted to the SSA or was recorded at an incorrect amount can produce a 0 or a low figure on your earnings record that silently reduces your benefit calculation for the rest of your life. If you worked for yourself at any point, even for just a few years, examine those specific years with extra attention when you open your statement. The documentation for this group is your Schedule SE and the corresponding Form 1040 for the years in question. Those 2 documents together establish what your self-employment income was and what Social Security tax you paid on it. Now here is a tip specifically for this group that most people explaining this topic skip over. If your self-employment earnings show correctly on your statement but are lower than you expected, check whether your Schedule SE was filed correctly for those years. Self-employment tax is calculated on net earnings after business expenses. If your expenses were reported incorrectly and your net earnings were understated, the SSA received a lower number than your actual situation warranted. The third group is anyone who changed employers frequently throughout their career. Every time you started working for a new company, that was another opportunity for a payroll department to enter your Social Security number incorrectly, to mistype a digit in your name, or to attach your wages to the wrong record entirely. In those cases, the earnings were reported, they just were not reported under you. The more employers you had across your working life, the more opportunities existed for at least one of those transitions to produce an error on your record. Check the years when you changed jobs most frequently with extra attention. Transition years, the year you left one employer and started another, are where errors concentrate most heavily. And check the employer name in your memory against the years on your statement. If a year shows lower than expected earnings from a period when you were working full-time for a company you remember clearly, that mismatch is worth investigating. The fourth group is the one I want to speak to you most directly, and it is consistently the most overlooked and the most financially damaging of all 4. Anyone who changed their name at any point during their working life and who did not immediately update that change with the Social Security Administration, here is exactly what happens in that situation. If the name your employer submitted to the SSA does not match the name currently on your Social Security record, those earnings can fail to attach to your file at all. They sit inside the system credited to nobody. Real work, real paychecks, money you earned through your own effort, simply not counted towards your payment because the name on the submission did not match the name on the file. This happens most commonly with women who change their name after marriage or divorce. A woman who worked under her married name for 15 years, then divorced and changed her name back, may have a stretch of her career where the earnings are sitting inside the SSA system attached to a name that no longer matches her record. If you are a woman who changed your name at any point during your career, and you have never specifically verified that the earnings from your prior name are correctly attached to your current record, go look at the years surrounding that name change right now. Those are the years most likely to be showing errors or zeros that represent real work you genuinely performed. Now, here is something I need to tell you directly, and I want you to hear this clearly because the timing is specific to right now in 2026. The law gives you 3 years, 3 months, and 15 days from the end of a taxable year to correct earnings for that year under the standard window. The legal reference is 20 CFR section 404.802. Under that rule, for 2022 wages, the standard correction deadline was the 15th of April, 2026. That date has already passed. But here is what most people explaining this topic do not tell you. The law has specific exceptions that keep the correction available even after the standard deadline closes. If your employer submitted a late report, the window stays open. If the SSA itself made a mechanical or clerical error in recording your wages, the window stays open. And most importantly, if you filed your own federal tax return on time for that year, and it shows earnings that differ from what the SSA has on record, that tax return qualifies as an exception, and the correction can still be made. This means if you filed your 2022 taxes on time and your return shows income that does not match your SSA earnings record for that year, the correction is still available to you. But the longer you wait after the standard deadline, the harder the exception argument becomes to support. Act now. Check 2022 first when you open your statement. If there is a discrepancy and you filed your 2022 federal return on time, that filed return is your exception and your correction is still within reach. Now let me show you exactly how to fix what you find. The form name, the filing rules, and the 2 warnings that cause most correction requests to fail before they ever reach a reviewer. I promised you a free IRS tool that retrieves your income records even if you have no paperwork left. That is in this section. Stay with me because it changes the picture entirely for people who assume their records were gone forever. The form you need is called Form SSA 7008. Its full official name is Request for Correction of Earnings Record. Write that down. SSA 7008. It is completely free. You can download it directly from ssa.gov by searching SSA-7008 in the forms of paper copy at any local Social Security field office. Or you can request one by calling 1-800-772-1213 and asking them to mail it to you. The form is 1 page on the front with instructions on the back. It asks for your personal information, the specific years where you believe the record is incorrect, and the correct earnings amounts for those years. It is straightforward to complete, but there are 2 specific ways people get it wrong that end their correction before it starts. And I want to make sure neither one happens to you. This is the point most people get wrong, and it costs them weeks of wasted time. The SSA does not currently accept Form SSA 7008 through the My Social Security online portal for most corrections. You cannot log into your account and submit this digitally. Despite what some online sources suggest, the form must be mailed or hand-delivered to your local Social Security office. Online submission is not available for the earnings correction process in most cases. If you mail it, use certified mail with return receipt requested. Write down the tracking number before you seal the envelope and keep it somewhere safe. That number proves the date the SSA received your submission, which becomes your reference point if you need to follow up. Never send original documents. Always send copies and keep every original in your possession. If you hand deliver the form in person, ask the SSA staff member to photocopy your supporting documents on the spot and hand your originals back to you before you leave the office. Your local SSA office address is available at SSA.gov using the Office Locator tool. If you are not sure which office serves your area, call 1-800-772-1213 and they will give you the address directly. This is the most common reason correction requests fail, and almost nobody explains it clearly enough for people to understand how serious it is. Form SSA 7008 requires your handwritten signature. A typed name does not count. A name written in a typed font does not count. Your actual physical signature in ink is required on the form. Here's why this matters beyond the form simply being returned. Under SSA processing rules, an unsigned form is treated as if it was never filed at all. Which means if you mail an unsigned form near a correction deadline and the SSA returns it to you after that deadline has passed, your correction window closes permanently. The form went out, nothing was received in the eyes of the SSA, and the deadline ran out while your unsigned form was sitting in a return mail pile. One specific documented case makes this concrete. A man mailed his SSA-7008 on the 10th of April, 2026 for a 2022 wage correction, just 5 days before the April 15th standard deadline. He forgot to sign it. The SSA returned it on May 1st, 2 weeks after the deadline. His correction window had closed. The exception request was denied. Sign the form. Before you seal the envelope, open it back up and confirm the signature is there. This single detail has ended legitimate correction claims that would otherwise have resulted in meaningful monthly increases for the rest of someone's life. Here is an insider tip that is not required, but consistently makes a real difference. Add a one-page cover letter to your SSA 7008 submission. SSA staff process a high volume of correction requests. A brief, clear cover letter that explains exactly what you are correcting and why makes your file easier to route, faster to assign to a reviewer, and more likely to be processed at the lower end of the 10 to 90 day processing range, rather than the upper end. Use language structured like this. I am requesting a correction to my earnings record for the following years. For the year in question, my records show earnings of the correct amount, while my SSA statement shows a different, incorrect amount. Attached are copies of my W-2 and federal tax return for those years as supporting evidence. Then list each year you're correcting with the SSA figure in one column and your correct figure in the second column. Keep it professional and factual, one page. The goal is to give the reviewer everything they need to understand your request without opening a single attachment. When the discrepancy is immediately visible in the cover letter, the reviewer does not need to search through your documentation to grasp what you are claiming. That reduces processing time. The strongest evidence for an earnings correction is your original W-2 form for the year in question. If you have it, lead with it. The SSA accepts W-2 forms as primary evidence, and they can trigger corrections without extended investigation. If you no longer have your W-2 forms, your federal tax return for that year is the next strongest option. Your Form 1040, showing the income you reported, is treated as corroborating evidence, particularly when combined with any other documentation you have available. For self-employed corrections, your Schedule SE and the corresponding Form 1040 are the primary documentation. Those two documents together establish both what your net self-employment earnings were and what Social Security tax you paid on them. What does not work as primary evidence? A personal note describing what you believe you earned, a handwritten summary of your work history, a spreadsheet you created from memory. These are not sufficient on their own. You need an official document. Now here's the tool I promised you at the beginning of this video. The one that changes the picture entirely for people who have no paperwork left from the years in question. If you no longer have your old W-2 forms or tax returns, you have two specific retrieval options that most people have never been told about. Option 1, the SSA itself can retrieve copies of your W-2 forms going back to 1978 at no charge when the purpose is correcting your earnings record. When you contact the SSA about your correction, ask specifically for this. Say, I need W-2 information retrieved for the purpose of correcting my earnings record. That specific request triggers the retrieval process at no cost to you. Option 2, IRS Form 4506-T. This is a free form called Request for Transcript of Tax Return, and it retrieves your wage and income transcript directly from the IRS database. Your wage and income transcript shows what employers reported to the IRS under your Social Security number for the years you request. That information can be used as supporting evidence in your SSA 7008 submission. You can download Form 4506-T at irs.gov. Complete it with your personal information and the specific tax years you need. Mail it to the IRS address listed on the form. The transcript is provided at no charge and is accepted by the SSA as evidence in the correction process. Here's why this matters specifically. Many people avoid pursuing corrections because they assume that without original paperwork, the case cannot be made.